And thanks everyone for, coming to this presentation, which I know it's going to be a lot of information. I'm going to be able to share some of the updated information, and I know we're probably going to run out of time. So, as we mentioned, please make sure that you have all those questions. If we don't get to those questions during the presentation, I'll make sure I'll try to answer all those as a follow-up. But again, this is one of the topics that it's something that we need to talk about it, understand, and hopefully, with the information that I share, will be able to help you make some of the decisions. So let me start with sharing my screen. Okay. Do this. Let's do this, and I'm going to start from here. And I'm assuming everybody's looking at my screen, right? Okay, so here, perfect. So today we're going to talk about, general information, updated information that we have so far, what we call accounting and recommended best practice for a successful, smooth PPP loan forgiveness process. And you guys are going to be able to actually see that when we say accounting, it's a lot more than just putting some numbers together. So again, it's general information, updated information, but hopefully it will be helpful to all of you. So we're going to talk a little bit about the history and what we already know so far, and we're also going to talk about the updated last minute information for the forgiveness regulations. We're going to talk about the timing on the forgivable costs, because that's something that is important to know, as well as the cost, what we call cost and amounts. Okay. I'm also going to share about what we think is missing, things that we still feel that they're up in the air, that we don't have specific answers, that hopefully, more additional information or even clarifications will come later. And I'm going to share what we call a recommended best practice, okay? It's definitely based on experience so far of what we know. It's important to share what we think is going to be important to have as part of the forgiveness process. Fair warning, okay? I had to say this. This is about to get really ugly. It's a lot of information to share, a lot of controversial material, viewer discretion advised, but it's all based on true story, because we all part of this. We already have so far, whether the loan process, because we already got funded, because whether you already got approved but just waiting for funded, especially for those that they just got the application in last week. And also, I'll be able to share my story, because not only as a tax professional, as an accountant, as a business owner, I'm going exactly to the same that all of you are going. So I feel really lucky that I was able to get approved for the loan, but I'll also be able to share my experience and my knowledge with a lot of small business owners. So let's get to it. So this is what we know so far, and if you don't know this, please, take note of this, because this is basic information about the PPP loan. The loan, if you already got approved and funded, it's a loan. It's not a grant yet, and it should be recorded in your books, whether you have a balance sheet or not, or in your mind, it should be recorded as a loan payable. As of right now, not until we go through the process of forgiveness, you have an obligation, I have an obligation to pay the loan back. So it's important to know that it's not an automatic forgiveness, is not an automatic conversion to a grant. We have to go through the process. Of course, we're going to talk about, the simple process per se, but as so right now, you sign the loan documents, you got funded, we have what we call a loan payable. The deadline to apply, probably most of you know, it was last week on August 8th, and it was actually like 2 days prior because most of the lenders that they were still taking application, they actually stopped taking applications like 2 days prior. So if you waited until the last minute, I have a couple of clients that at the last minute made a decision, it's too late. Now, it doesn't mean that perhaps could be an extension, a third round, or a PPP, funding, but as of right now, it's closed. Also, we have to remember that this is a loan that we got from a lender. It's guaranteed by the SBA, but the lend is administrated by the lender. So the note that you have is from your bank, from your, a smaller lender that you were able to use, but it's guaranteed by the SBA. And yes, this loan will be eligible for forgiveness. Of course, we have to go through the process, but it's eligible for forgiveness. Totally different than the economic injury disaster loan from the SBA. I'm just going to mention that a couple of times, but we're not talking about the economic injury disaster loan today, but which is, like I said, a totally different treatment. But this one, yes, will be eligible for forgiveness, and hopefully we all get through the process at one point. Once we get the forgiveness process approved, we actually what we're doing at that time is doing the conversion to a grant. So we want to make sure that we understand the difference between now a loan that I have and a grant after I get approved. And then we also know that by now we know that it's a 60% payroll cost, 40% other. We'll talk about those later. Okay. So June 17 was a great day. It was a great day because we got some of the newer information. They actually revised a lot of the initial information that, like everything else, was totally new. Some of those changes bring a lot of flexibility to the process, which I really like it a lot, especially for a tax professional accountant, like in my case, that I feel the obligation to advise a lot of my clients. I feel like an obligation to answer a lot of questions and be able to, get this updated information and share with our clients what's important. So definitely was a big change between the early version back in April. So some of those changes on June 17 is that we were able to see two different versions of the PPP loan forgiveness application. One that is going to be a normal application. And we really don't know at this point how much information they're going to ask. And we're not going to talk about that one now, but we do want to talk about the newer revised version of what we call the easy version of the application. And also I'm going to share who could be a good candidate to do the easy version. It doesn't mean that it's going to be simple, and it doesn't mean that it's going to be actually easy process, but the actual version of the application is a shorter version, smaller version, but obviously with some instructions as well as how to complete it. What I really like about the June 17 update is that the extended cover period that was originally presented to us back in April, it really brings flexibility. We'll talk about those two different periods that we have now in a minute, but it really created a different approach about the time frame that we have to spend the money. Also, new amounts between the payroll costs and what we call owner's compensation replacement. I'm going to talk about that one specific in a while, because that's, especially as a business owner, especially as a small business owner, is something important to know. Also, the ratios obviously were adjusted. The original regulations was 75-25. Now we have 60% for payroll costs, 40% for not payroll costs, which is one of my favorites. And what we call now the safe harbor for exemptions for those employers that they had to reduce either the number of hours to the employees or the wages itself, which is great news. This is my best friend after June 17. And again, we'll talk about it in a minute. So the actual allocations right now, and some of the most specific information that we have is that, what we call the other expenses, it covers, mortgage, rent, and utility obligations. And what we have to remember in this case is those obligations, whether it was a contract, an agreement, a verbal agreement, those they have to be enforced, or we were obligated to pay them back in February 15th. And this has the intention, the program has the intention that people are not just rushing in to, create something that it wasn't there, especially like a lease agreement or any other type of contract, but now they want to spend the money or use the money for that obligation that it didn't exist. So keep an eye on those. This happens a lot. The clients were about to enter into an agreement. They just move into a new location. They didn't have this back in 2019 or the beginning of the year. So a lot of those specifics, we definitely have to, talk about it. And now the ratio is at 4. Now it's 6% payroll costs for those non-payroll costs, which is much better allocation than it was before. The 75-25, especially when you're not able to go back to your normal number of employees or wages, this is definitely a great change. And something that we have to remember is, especially those of us that on top of the PPP loan, we were able to apply for the economic injury disaster loan with the SBA. If you did receive an advance, not the loan itself, if you did receive an advance, meaning up to $1,000 per employee, the advance that you receive will impact your PPP loan amount subject to forgiveness. So start thinking about those things. If you didn't have employees, you probably didn't, not even know about the advance. But those of us that have employees that we receive that amount right away will reduce our PPP loan forgiveness amount. And then also we know now that some of the loans in excess of $2 million will be subject to some, audits or particular review. How much, how big, how deep, we really don't know yet. Out of all my clients, I only have one that they received 2.5 million on PPP loan, which, even for me was a surprise. In this case, they already know that probably a good amount of that amount could not be forgiven just because they lost so many employees or they had to do modifications to their activities. But as of right now, those are the ones that we know that they were going to be subject to some kind of audit. Now, it doesn't mean the loans under $2 million are not going to be audited. Okay, we just don't know. And that's the reality. We just don't know. If you ask me, you think I only got $100,000, $80,000, will those be audited? My answer is, I don't know. I hope not. There is something on conversations, but nothing obviously official. The loans under $150,000 could be not subject to any reviews. But again, as of right now, we just don't know. In the meantime, we have to be prepared to make sure that we keep all the records. Again, I'll talk about that before. And then finally, the actual PPP loans originated on or after June 5th, they're with the lender as part of your note. The maturity time frame is 5 years. Those that they were signed and funded prior to June 5, so right now they had 2 years maturity there. But also we have the flexibility to talk to your lender to transfer those 2 years into 5 years. When I said at the beginning that it's based on true story, again, it's because a lot of us are in this situation. I'm going to start sharing my own story now that we're getting to a lot of the specifics. My PPP loan got funded probably the second week of May. And of course, this was after we were sent home back in March, right? If you can just picture me on your mind, I'm a tax professional. We're in the middle of tax season. And suddenly we get the order. And as I shared before with other people that know me, with tears in my eyes, I sent my employees home. And we just didn't know what's going to happen. Of course, in my case, in a few days, we learned that we were part of essential, business, but we had to do a lot of modifications. We have so many limitations we were going to able to go back to work, that even that, just because we were essential business, it didn't mean that we're going to go back to normal right away. Even until now, we're not back to normal. Excuse me. And we even thought, I don't know about you guys, but I thought once I submitted my applications, because I did it right away, the first day or two when everything was open, local, SBA, the whole thing, I started submitting applications. And, I thought the money was going to come in right away, right? I still have clients that they haven't received their economic injury disaster loan that they applied back in April. In my case, I got declined by my normal bank because they ran out of money and they didn't give me any other options. But I was able to get it through a smaller lender that they, took care of me. But my loan was funded in May. So in my case, I have a loan document that it says that I'm going to start making payments in November. Okay. I'm sure some of you are on the same situation. Loan payments are going to start in November, and I have 2 years to pay the loan, of course, unless I go to the forgiveness process, right? And I get the forgiveness. So I need to, at one point, I need to talk to my lender to transfer that maturity time to 5 years instead of 2 years, and hopefully they'll be able to grant it. Hopefully they'll work for me. Even though the Treasury has that in place, it doesn't mean that the lender has to do it. As far as what we know, I'm sure most lenders, if not everybody, will agree on that. If it's after June, it's an automatic. June 5th, I'm sorry, on or after June 5th, it's an automatic 5 years. The first loan payment, actual payment, is still 6 months after it gets funded. So we just to keep something in mind. So I'm going to talk a little bit about what we call it the actual timing of forgivable costs, right? Because this is important to know in terms of what is my time frame to start keeping track of not only the expenses, but also when I should start the process of application. And of course, everything is subject that the lender will be ready to start receiving applications. So a normal loan, again, June 5th or after, now we can take 24 weeks to spend the money. Whether it's the perfect combination of 60-40, or if it's everything on payroll, there's nothing against the possibility you have to spend everything on payroll. But we have a 24-week time frame, which is what we call the cover period. This is where we are going to spend the money. Now, we can run out of money before the 24 weeks, but it has to be within the 24 weeks after we get funded. Okay. If you receive the actual funded prior to June 5th, you have the option of taking the 8 weeks or the 24 weeks. If you receive the loan funded in June 5th or after, your only option is 24 weeks. Now, I have some clients that they say, but I want to get it done as soon as possible. My standard recommendation is no. You should take advantage of more time for so many reasons. First of all, because almost every day we're learning something new. I'm almost positive we're still going to get some new updated regulation changes, allocations per se, that you really don't want to rush into the application. Now, the second part of this is that you have to check with your lender. You have to keep the communication open with your lender to make sure that they are ready to start taking applications, and to make sure that you have all your records. So 8 weeks as an option for those funded prior to June 5th as an option. Those funded on June 5th and after is 24 weeks. I'm taking the 24 weeks. Not only gives me the opportunity to hopefully get my employment number of employees and wages to a good number, but also, I be able to, take advantage of whatever news, new news are coming per se. Now, this is something that the alternative payroll cover period is important. Again, I'm using myself as an example. You got funded, let's say, on a Tuesday, okay? And the exact day is important. Actually, the application will ask you what day you got funded, okay? So let's say you got funded on a Tuesday, but your next payroll is not until Friday. Same week, some other ones will be until next week. You have the option to pick the alternative payroll cover period so it will start on your first payroll immediately after you got funded. Okay. I got funded, I believe, on, I want to say probably the 9, the 10 of May. My next payroll was on the 20. I will take the alternative payroll cover period on the 20. In this case, it was in May. That's where I'm going to start keeping track of all my expenses. Something just to keep an eye, so that way you know that you're not missing any possibility to extend even for a week or a few days, or that you don't have to go back and make calculations for the number of days of a period that doesn't belong to the payroll cover period. So again, keep an eye on those little details. In some other places, we see the application that it says that, you're gonna take the alternative cover period. Just make sure you check the box or you don't. Okay. Again, little details that when you're going through the process of filling out the application, you want to make sure that you pay attention. Okay. Whether you take the regular cover period when you get funded or the term, everything has to end on December 31st, 2020. Okay, I don't see, like I said, unless people that are just getting funded right now, everything should end on December 31st in terms of the time frame, how do I spend the money, and if I spend all the money. Also, the application has information, and in general, the regulation that it says that the payroll cost or any other cost has to be paid and incurred during the year, meaning during the cover period. And it starts getting, of course, a little bit more complicated depending on your, your payroll situation. For those of you that have more than one, more than one employee, those that they have an employee that, your vacation time, you really have to keep an eye into what is it what I'm paying right now in terms of when this earnings, when those wages, where those vacations or any other benefits that, are includable that they earn. So when we say that to keep track of a lot of specifics as part of the whole accounting that you need to take in consideration, is not as simple as it sounds. If you have an employee, let's say, that for some reason had something that it was earned prior to your cover period, and now he's getting paid, you really want to make sure that that's going to be accepted. Okay. And again, those are part of the little things that we don't know yet. Also, if for some reason the person didn't get paid for whatever reason, make sure that he gets paid on the next regular payroll day. again, we don't know how much into deeper details we're going to get for the review, audit, or even the lender. I'm not sure how deep into those details we'll get, but this is what the regulation says. So I want to make sure that this, what we call the timing, it's something that you keep an eye on it, especially if you have, employees or more than one employee. The actual payroll costs, now that we have the updated information for employees, even though we could use up to $100,000, which is exactly what we used when we submitted the application, right? If the application had a question that you have any employees that earn more than $100,000 because you're supposed to reduce that amount up to $100,000, this is where people start getting confused. They think they're going to get $100,000 forgivable. No, the maximum amount to make my calculations is $100,000. Okay, and then out of those $100,000 per employee, if I'm on the 24 weeks option, the maximum that I could use is $46,154 as part of the entire payroll cost. Okay, and if I'm on the 8 weeks option, I get the amount up to the maximum amount is $15,385. And I get this question a lot. Oh yeah, but it's up to $100,000 to an employee. Yeah, but that's for the calculation. That's my maximum amount that I can use to calculate, is not the maximum amount that I'm gonna get forgiveness. So a lot of those clients, especially at the beginning, they were those that they get funded right away. They were asking me, so I just go and pay my key employees a little more. I pay myself a little more, and then we learned that that's not necessarily true. But this is a question that we get all the time, definitely all the time. And again, as a total payroll cost, right, which it could include some benefits for the employees. We'll talk about the owners in a minute. For the employees, including some healthcare expenses and retirement contributions as well. Again, this is something that we already use as part of the calculations to apply for the loan. So this didn't change. It was part of the application. Healthcare, retirement contributions, of course, the part of the employer contributions, and some state taxes. In this case, in California, employment insurance was included. Also, some of the costs, it will be effective for some of those that for some reason, even though we're using that 2.5 multiplier per month, we didn't reduce the maximum per individual, whether it was, the wages or the hours, unless we qualify for exemption, which is, the safe harbor rule as part of the forgiveness that we're going to talk about it in a minute. I'll pause right there. I'm not sure if we have any questions so far.
The only one that I saw was basically, how does the lender make money if the loan is forgiven? But they were making money from the federal government, correct?
That I know, yes. That I know they're not going to make money from us unless some of that amount is not, it's not approved for forgiveness, because we're going to have a lot of partial forgiveness, and then we're going to pay obviously interest. It's a 1% interest. That's how they're going to make some money, but that I know they're going to get paid by the federal government, and then the extra income will be from the 1% interest for those amounts that they're not going to be approved for forgiveness.
Okay, thank you.
Okay. Now, this is something that, we all should pay attention, okay? Because this was a surprise for me. For small business owners, for the actual owner that we still consider, especially for this program, employees, because we make money out of our business, and I'll get to the specifics in a minute. There's some specific regulations, totally different than the employees of our company, especially when we're talking about the maximum amount. Okay. So if I am one of those loan recipients that I am taking the 24-week cover period option, and I am the owner of the business, my maximum amount is 20,833, or the equivalent of 100% divided by 12 times 2.5. And I know, I already know this obviously by heart, but it's subject to the lower of those two. So if for some reason my compensation is less, the calculation of the 2.5 month equivalent is less than 20,833, the lower amount is what it's going to be subject to forgiveness for the business owner considered employee. Okay. For those that they're using the 8 weeks, it's even lower. It's 15,385, or again, once we do the calculation on on a 2.5 equivalent, if it's less than 15,385, that's going to be your amount forgiven. Not for the employees. Again, the employees was 46,000 something, or 15,000 for those on 8 weeks, but for the owner considered employee, these are the amount, and it's meant to be the actual, a regulation was meant to be to have the business owners bring or keep the employees, bring the employees back or keep the employees, not so much for us to make more money at the individual level. That's why these figures are there. So even though it might sound unfair, the intention of the law was to take people out of unemployment, keep making payments to, as wages to individuals so they can stay home taking care of their kids or a family member, but not so much for us as an individuals to make more. Now, some of this mention this really quick because some other people or some other business owners, they might start thinking, or they probably already used other possible benefits of the law in general, like retention, employee retention credit, or paying sick pay so people can stay at home. You really have to be careful which ones of those are you're including, because not everything is part of the not everything is available if you're having, if you already got your PPP loan and going to the forgiveness. So pay attention to those. Now, more specific, on June 23rd, we have, what we call the final rule, but again, could be subject to changes. For a C corporation owner, which, as a small business owner, we don't have a lot of those. But for those, the 2019 compensation and retirement and health insurance could be part of the calculation. Again, C corporation, the owner that is also considered employee. Okay. And then the S corporation is, or 2019 compensation plus retirement, but no health insurance. And again, I use myself as an example. My business is an S corporation. I get paid as an employee. Okay. Obviously, I have other benefits from the company as well, and including health insurance. If I'm going to have, my total compensation included on this calculation, I have to remove the cost of health insurance for myself. But I could include the retirement contribution if there's any. But I have to use my 2019 total payroll as part of the calculation. I'm not able to use my 2020. And again, those are the things that we still feel that, perhaps changes will come, or clarification, in some of those. And then for partners, especially for those with an LLC of a general partnership, which we know we have a few small business owners that they run the business as a general partnership or an LLC. Also, those, they're going to be their 2019 net earnings, their profit. And they're going to be reduced for, any depreciation under Section 179. I'm not going to get into all the details with that. But they're not going to be able to include retirement contributions or health insurance because normally their net earnings have those already deducted. So if you're a business owner, whether it's a C corporation, an S corporation, or a general partner, the compensation to yourself, you really have to pay attention to these figures. Nothing to do with the rest of your employees, but definitely you as an individual part of your business. And again, I'm a perfect example of this. I actually had a few of my clients that they're small partnerships or LLC that they were told by the lender that they should be on payroll right away. And my advice is no, because they're not supposed to be on payroll to begin with. It will definitely create additional costs that is totally unnecessary. I told them to wait. We didn't run payroll. Those are, again, just for general partnership or LLC. Corporations, S corporations especially, they're obligated to get compensated if you work for the corporation. But in case of the general partnership or the LLCs, because they pay their self-employment tax on their earnings, these calculations will impact how much of my income, if I belong to a general partnership or an LLC, I'll be able to include. If I get paid from my S corporation, how much am I going to get included? Am I going to be treated like any other employee? The answer is, as of right now, no. There's some items that it could affect, your total amount that you use for calculation. Right? Let's see. Okay. Some of the reductions that could affect the loan forgiveness process is that the perfect scenario, let's start with the perfect. The perfect scenario is that I would send home, but then I was able to go back or stay in business right away with no interruptions in terms of possible income or revenue. And also because of that, there was no interruption on, how much I pay my employees, the number of employees I have. That possible, I go through the process with probably nothing to worry about it per se. Okay, again, I'm still thinking that even the easy application is not going to be easy. It's not so much the application itself, is that everything else, obviously, that I have to take in consideration. But that's the perfect scenario, okay? If for some reason I have, my business was affected, especially with that I had to make a decision to have a reduction on number of employees or the actual wages, the amount, in order to achieve 100% forgiveness or as much as possible, I have to be able to eliminate that reduction or that impact, of course. Some of those are obviously the normal: rehire the employees right away, hire somebody else new, especially for those of us that we still competed with unemployment benefits, right? Because the employees are, able to collect unemployment benefits that, they have no desire to come back to work. But how do I eliminate some of that? Is rehire, of course, hire somebody new, or my new best friend is the safe harbor rule. Okay, and we'll talk about those in a minute, but the safe harbor rule really, really shows the flexibility, the intention to help the small business community in the actual makes the actual process of trying and prove that we did try to come back to normal operations per se, especially with employees. It really brings flexibility. And the first one is that, I have until December 31st trying to restore, my normal number of employees or wages, which, it was obviously, on the initial regulation, it was June 30, which it was crazy. Okay. So safe harbor rule as part of the PPP loan forgiveness, again, my best friend. So I want you guys to, read about it, think about it, and then I will go to the part. Any questions so far? I'm sure we covered everybody.
Yeah, we have a quick question, and we have about 10 minutes left.
Okay.
So we might go a little bit over. If we do, I'll obviously continue to record. If people have to sign off, we understand, and they can finish if we do go a little bit over. But so Ashley asks, what about part-time employees? I own a fitness studio with staff that have full-time jobs but teach on the side. My loan is not enough to cover payroll for all my employees. I've cut my staff in the meantime to survive. They all have full-time jobs, so they're okay financially. But my understanding is that I have to keep a certain percentage of the employees that I had before on the payroll. Do I just bring them all back and pay them as I did before until the money runs out and then cut them again?
Well, and this is where the safe harbor applies. And I go through this a little faster, but definitely this is, again, our best friend is that, and again, I'm the perfect example. I have a lot of employees during tax season. I lost more than half of my employees. I wasn't able to bring a good portion of them back. I wasn't, because they were already unemployed or a fear for, their health and so on, that I wasn't able to get it. And my income was not even at the level, because they extended the tax season. Now I have to spend more time to make, almost the same amount of money, if not less. So the safe harbor rule, it really provides a flexibility that as long as you have everything documented, that you obviously lost some revenue, not able to go back to normal activities, and you lost those employees, as long as you have everything documented, we should be able to apply for forgiveness, taking that exemption in consideration, especially gyms, hair salons, some of those, industries that they were hit really, really hard. And those, they should be using the safe harbor rule. So I will say that it's not that you have to bring the employees back, it's that you have to make every effort possible to do that, obviously, with all the protocols, safety protocols and issues, not only with COVID-19, but also local regulations as well, county, state, the whole thing, right? But that's what safe harbor rule is about, is that I'm gonna be able to prove that I did everything possible in good faith to return to my business activity, and I wasn't able to do it. So keep that in mind. And we have all that, to do all that from March 1st all the way to December 31st. I keep trying. Again, it's me. I still keep trying, and I'm not able to do it. So safe harbor will be, in those cases, a really good option to take. Again, be able to reduce, be able to go back to normal wattage, which was February 15. Most of us were not going to be able to do it. A lot of small business owners were going to be able to use safe harbor rule as the exemption, as to go back to normal. And also, this is the part that I can also include in those employees. I'll be able to exclude, per se, those employees that they were fired for because of a cost, or they resigned. I have a couple of those, or they actually were the ones that requested a reduction of hours because of their personal situation. One of my employees, she has to take care of the kids because the kids are not in school. She has to wait until the husband comes from home to go back in the afternoon to go to the office. She requested that reduction is part of the safe harbor rule. So again, keep an eye on that. Definition really quick of a full-time employee equivalent. Okay, 40 hours is a full-time employee, and it's the easiest way to explain under the simplified method is that 40 hours is equivalent to 1. Anything under, you can pick the simplified method, which would be 0.5 of employees when you start doing your calculations of how many employees and how much of a reduction of employees, or the wages. This is something that you definitely want to keep an eye on. Okay? In my case, I'm going to have a few employees equivalent to 40 hours one. I'm going to have a lot of 0.5 employees that I'm going to be able to combine for my calculations. Other information that we have available so far right now is the requirements, okay? And again, we're really looking forward to hear from lenders eventually about what they're asking for, but for sure, you know, your payroll records, if you have employees, or those non-payroll records, you know, for the other 40% that you use, make sure that you, you know, keep an eye on, you know, you have your accounting ready. I think there's going to be one part of the applications where we're going to certify for, say, under penalty, you know, penalty of perjury, because there's some fines if we provide false statements. Okay, I'm going to skip to that one really quick. The easy application. This is who we consider that is a good candidate. Okay, self-employed individual with no employees. Okay. If you were doing landscaping on your own with no employees, if you did Uber on your own with no employees, if you were a hairstylist just on your own with no employees, people that they sell from home that they have no employees, those are perfect candidates for the easy application, because the part where it says payroll, it's not going to be for the employees, it's going to be for your, you know, your take-home money, your earnings after all the expenses are paid. Also, if you did have a payroll, but you know, self-employed have payroll, but you didn't reduce the employees, the number of employees for more than 25%, or the number of hours, those are perfect candidates. I have some constructions clients that they are in the construction industry that they didn't use nor the number of employees or the number of hours. They actually can tell you that they have a lot more work than before. So, you know, depending on the industry, of course. And then those that, even though they did experience some damage, they continue pay the employees, whether they babysit, you know, the office or work, or they stay home, but they continue to pay the employees. Those so far are perfect candidates for the ET application. So why not? This is what we call a recommended best practice, okay, in general, okay, and we'll finish right on time, I think. Little things, personally, find your note, the loan note. A lot of people, we just sign the document, it's somewhere on our DocuSign that we probably not even know how to access. Please start with finding your note, okay? You're gonna need that. You have to make sure that you know the dates, that you're able to talk to your lender. Keep good payroll records. Avoid doing yourself, DIY. And I'm a big pro on DIY with a lot of things, but not on payroll in general, not on payroll for this purpose. If you have to you know, manage some reports, make sure you either use the payroll software or you use the payroll provider that does take care of this for you. Keep excellent, I'm gonna say it again, excellent bookkeeping and accounting records to avoid last minute issues, such as having the receipt, the proof of payment, and so on, especially now when everything we pay is automatic, online, Apple Pay, it gets deducted from my bank account. Start gathering all those records. You know, if you're big enough to have a bookkeeper in house, perfect, but most of us, you know, we have to do a lot of things on our own. This is your homework. This is where you need to start, because you really don't want to wait until the last minute to start finding records. Download, print, you know, start creating a folder, whether it's digital or not, but start putting things in one place where you know it's there. Again, it doesn't have to be an actual, you know, paper record, but you have to make sure that you're creating a folder somewhere on your computer or, you know, on the cloud to start putting that. Don't wait until the last minute to submit your application, but don't be the first one either, okay? Don't be the first one either, because we really want to make sure that, you know, the lenders are going through the process, that we wait in case there's something else exchanging. Let's wait a little, you know, till we get experience. We hear from other ones. This is all new for all of us. And remember, we have actually 10 months to apply. Not that we want to wait 10 months after, you know, the cover period ends, but there is time. Most important, that your lender is ready and that you are ready. Do some tax planning. Here's the big surprise. the loan, that it's approved for forgiveness, and we get the forgiveness process completed. Now it's a grant, and expenses paid by a grant are not deducted. Now, if my PPP loan was only $6,000, $5,000, $8,000, it's probably not going to make a deal in my business not having those deductions, because I probably lost a lot more income. But if it's big enough that it could make an impact, you really need some tax planning. 2020 tax year in 2021 will be very interesting, and you have to keep an eye on. Ask questions, seek professional advice. This is something that you definitely don't want to do it on your own, and you really need help. People have the question, where do I start? Okay, I already started the forgiveness application, meaning internally putting together, because you were thinking that you're probably going to use the 8 weeks. Think again, talk to a professional. Not that we know how to act, we just know a lot more information, because we've been learning, reading, following, keep an eye, keep up with all the regulations, that we can probably do a good job, providing advice. If you just don't know what's next after you already have your records, how to your lender, obviously seek for help. And most important, focus on your own situation. This could be really, really big, a lot of information, but focus. This is my situation. This is what I think I need to know. Forget about everything else. It's one of those things, one of the process that your own situation could be totally different than the other one. Not that we don't want to learn from other ones, but don't worry about learning or remembering or discussing parts of the law that are very relevant to your situation. That's my best advice, is a focus on your situation. And we definitely understand that, this, if not all this information is definitely not easy to understand. Look for professional advice at any time of the process, or when you think you're ready, but do your homework in terms of keeping track of all your records. So when we call accounting of the PPP loan, is more about make sure that you have everything. I'm gonna just stop right there. Okay, my final pass is good luck. Again, seek advice. Here's my information. Feel free to reach out to me. I'll be happy to provide as much information or additional information that is necessary. I know we probably don't have all the answers for all the questions in a specific situation, but I think this one will give you a really, really good idea. I'm going to share really quick a picture of the application. So, okay. What they meant to be easy is a 2.5 page, actually 2, because the third one is just information. The first part of the application is what really matters, but the problem is, how do I get to these figures? Am I getting the right figures on this application? And something to keep an eye is that the expiration date of this form is 10/31/2020. So my guessing is there probably going to be some changes